Welcome and get ready to dive into the thrilling world of investments, where numbers dance, money talks, and the unexpected always keeps us on our toes. Welcome to Invest Growth Wisdom, where we believe that the right investment strategy can indeed change not just your life but the financial trajectory of your entire lineage. Imagine turning a $25,000 seed into a towering tree of wealth, branching out to provide shade for you, your children, and even their children. That's what we're here to discuss today, the powerhouse of an investment vehicle known as a Dividend Growth ETF, and not just any, but one of the finest in the stock market realm. Before we dive deep, do me a favor, if you find yourself intrigued within the first few minutes, hit the like button to support the channel. Now, let's embark on this wealth-building journey together. Let's first understand why picking the right securities, be it stocks or ETFs, is important for long-term investment success. While the allure of quick, significant gains from individual stocks can be tempting, remember, they bring along their share of volatility and risk. On the flip side, ETFs, exchange-traded funds, have soared in popularity. You might wonder, why? The answer is twofold: diversification and the minimized risk of exposure to any one particular company's performance. In the spotlight today is the Schwab US Dividend Equity ETF, ticker symbol SCHD, known for its impressive track record in the world of dividend growth investing. SCHD stands out from other ETFs as a prime choice for those seeking consistent returns. Its objective? The fund's goal is to track as closely as possible, before fees and expenses, the total return of the Dow Jones US Dividend 100 Index. We know this index is a collection of high-caliber stocks known for their dividend quality and sustainability, something not all investors fully appreciate. Now some highlights of the fund. A straightforward, low-cost fund offering potential tax efficiency. The fund can serve as part of the core or complement in a diversified portfolio. Tracks an index focused on the quality and sustainability of dividends. Invests in stocks selected for fundamental strength relative to their peers, based on financial ratios. One standout feature that draws savvy investors to SCHD is its incredibly low expense ratio of just 0.06%. It stands as a cost-effective option for long-term value. Launched in October 2011, SCHD has grown into a financial giant with total net assets of around $47 billion, a testament to its popularity and performance. But it's not just about the numbers. Now, let's take a moment here. If you're enjoying the content and find this analysis helpful, consider subscribing to Invest Growth Wisdom for more financial insights. Together, we can build a community of smart, informed investors. Now, let's take a closer look at the Dow Jones US Dividend 100 Index, the exact index that SCHD is closely watching. The Dow Jones US Dividend 100 Index is designed to measure the performance of high dividend-yielding stocks in the U.S. with a record of consistently paying dividends, selected for fundamental strength relative to their peers, based on financial ratios. In the Dow Jones US Dividend 100 Index methodology, the index universe includes all the companies in the Dow Jones US broad stock market, except for REITs. No REITs allowed, even if they meet the criteria. And stocks must pass the following screens. Minimum 10 consecutive years of dividend payments. Minimum FMC of $500 million US. Minimum 3-month ADVT of $2 million US. Now, let's get into how they construct this index. First, they rank eligible stocks based on things like free cash flow to total debt, return on equity, IAD yield, and a 5-year dividend growth rate. Next is, the 4 rankings are equal weighted to create a composite score, and the eligible securities are ranked based on this composite score. Lastly, the 100 top-ranked stocks by the composite score are selected to the index, subject to the following buffer rules that favor current constituents during the annual review. Curious about the top holdings of SCHD? They're weighted by market value, with giants and industry leader like Amgen, Verizon, Broadcom, AbbVie, Coca-Cola, Cisco, and Pfizer. It's a strategic mix that mirrors market trends, giving you a well-rounded investment. Now, let's talk about dividends, the heart of SCHD's appeal. The ETF's current dividend yield stands around 3.76%, which, combined with its growth potential, presents an attractive package. But the real game changer is the dividend growth rate, which measures how much the ETF increases its dividend payouts over time. Impressively, SCHD has consistently raised its dividend, showcasing growth rates that would make any investor's heart skip a beat. In the past year alone, it increased its dividend by 5.7%. Taking a broader perspective, we observe an impressive 11.44% growth rate over 3 years, a remarkable 13.69% over 5 years, and a solid 11% over the last decade. These numbers not only underscore stability but also signify sustained growth, establishing SCHD as a compelling choice for investors with an eye on long-term rewards. In 2011, the ETF's quarterly dividend was a modest 12 cents per share. Fast forward, and that figure has ballooned to 65 to 70 cents. It's not just growth, it's exponential growth. If you invested in SCHD back in 2011, not only has the value of your shares likely increased, but the amount you're receiving in dividends has also grown substantially. This is the magic of dividend growth in action. The more you hold, the more you earn. Let's add another layer to this exciting investment journey. Picture investing $25,000 in SCHD, and on top of that, we'll commit to a $1,800 annual contribution, equivalent to $150 per month. Considering SCHD's initial starting dividend yield of 3.8%, let's assume an 8% annual dividend amount increase. Throw in an expected annual share price appreciation of 3%, and we're set. With distributions happening quarterly and the magic of DRIP or dividend reinvestment turned on, we're ready to witness the compounding magic. Over the years, this strategy doesn't just build your portfolio, it supercharges it with the power of compounding dividends. We're not just throwing around theoretical numbers here. SCHD's historical performance provides a window into the potential future. Of course, past performance isn't a guarantee of future results, but it does give us a roadmap of what's possible. Even conservative estimates of dividend growth and share price appreciation paint a picture of a snowballing investment that grows exponentially over the years. In the initial year, the $25,000 principal would yield approximately $963 in dividends, not a life-altering sum, but here's where the intrigue begins. Fast forward to year 5, and the principal has blossomed to $40,000, churning out around $1,800 in annual dividends. It's the inception of the snowball effect. Leap ahead to year 10, and our investor boasts a $67,800 investment, reaping a delightful $4,000 in dividends. The true enchantment unfolds around year 14 when the portfolio hits a $101,000 principal, generating $7,300 in annual dividends. Skip to year 28, and behold a staggering $533,000 invested results in an annual dividend yield of around $76,900. But hold on, there's more to this tale. Come year 40, our investor, who embarked on this journey with a mere $25,000, now witnesses a portfolio of $4.5 million, accompanied by an annual dividend payout of $1.1 million. Yes, you read that correctly. The undeniable power of compounding is at play, and these numbers stand as a testament to its undeniable efficacy. Before you think this is just a far-off dream, remember that the real value of long-term investments is all about being patient and sticking to the plan. Whether you're new to investing or steadily building a future fund, the key is to stay committed. With a disciplined investment approach, even after 30 or 40 years, the numbers we're talking about could be life-changing. That's the beauty of sticking with a solid investment like SCHD. It's the gift that keeps on giving, potentially setting you and your family up for generations to come. Now, before we part ways, remember this: the power of compounding is not just a financial concept, it's a wealth-building phenomenon that, given time, can work wonders. So, tell us, what's your investment strategy for the future? What's the crown jewel of your portfolio? Drop a ticker symbol in the comments below, and let's discuss. If you've enjoyed this video and our foray into financial growth, smash that like button, and don't forget to subscribe for more content that could help you grow your wisdom and your wealth. Thank you for joining Invest Growth Wisdom today. Keep investing smart, and remember, your financial wisdom today is the growth of your wealth tomorrow. Until next time.